I'm going to start with you, because we just recently, a few moments ago, got a tweet from President Trump in which he said China and Europe are playing big currency manipulation game and pumping money into their system in order to compete with the USA. We should match or continue being the dummies who sit back and politely watch as other countries continue to play their games as they have for many years. Your reaction?
My reaction is very simply that negotiating adversaries, and I'm not having bad intent here, adversaries in negotiations will use whatever advantages they have to try to even the playing field. China's record is pretty clear on this. Europe does what it does, and of course their economies are not in great shape either. But the bottom line is the president calling that out, I think, is a negotiating tactic on his own. The bottom line here is that we remain in negotiation with China. We've remained in negotiation with Europe since just about this time last year, and that's going to continue. So overall, even though there's more market uncertainty about the outcomes, that engagement is a positive.
Thomas, I'll put the same question to you, especially in the midst of all of these trade talks. Is the dollar too strong?
Well, the dollar remains strong because the U.S. economy is strong. There are limits to what China can do to keep its currency value low, partly because a lot of money is coming out of China. If they let the currency get too undervalued, then more and more will pour out, which would have negative effects on their economy.
Thomas, I want to get into some of the nitty-gritty around these renewed talks with China for trade, because in your notes you break this down into 3 parts. What are they, and what will it take for those to play out?
Well, the current state of play is that they are going back to the table. We don't know when they're going back to the table, but they've committed to that. China's given a few concessions in terms of buying more agricultural products, and they see it as a concession of going back to the table. The U.S. on its side relented a little bit on the Huawei sanctions and deferred from imposing new tariffs. The next steps are talking, and the president has said this may take a while, and I'm afraid it will, because there isn't a strong incentive yet for the Chinese to make further concessions, which would have to be, to get a good deal, to have serious structural reforms on the way they treat intellectual property, the way they subsidize their industry. So my view is that the existing tariffs on China, as well as the technology limitations that have been put into place, are going to have to take a while to have more impact on the Chinese economy. We can already see that the Chinese economy is weakening. The manufacturing reports yesterday showed that China's manufacturing sector is actually contracting. So slowing down the economy of China will put some pressure on the leaders there to take the trade negotiations more seriously.
Terry, if this is a long process, if it's basically kind of an uneasy status quo, are markets set up for that? I mean, what would you be telling clients here in terms of filtering the trade situation into their investment outlooks?
Well, what I've been saying essentially is that going into 2020, I mean, clearly they're not going to be finished in 2019, firstly. Secondly, this goes into 2020, but it does pretty much in suspended animation. What I think both sides are signaling is they're not willing to ramp up anymore, but they're also not willing to come down. The linchpin of this, in my view, is enforceability. The United States insists on an enforceable deal. China balks at that. As long as China continues to balk at that, there's not going to be a deal. My point to folks has been essentially, you're going to have a quiet summer, but once we get past Labor Day, you're going to have a lot of different things play into an overall uncertain Washington, D.C. market negative. You're going to have trade. You're going to have Other geopolitical issues. Iran was just discussed on your air within the last hour. You're going to have another partial government shutdown, which I think is very likely. You're going to have a variety of these different sorts of events. Drug pricing legislation moving through the Congress, all of which will contribute to a sense that there's greater market uncertainty. And on top of all that, the Democratic presidential nomination process gets a lot of mind share. And the big question there is going to be, is there going to be an insurgent challenge to Trump from the left, or will there be an establishment challenge? So all of that plays into market nervousness, I think.